Okay. Welcome back. So now we're going to do a chapter 7 and 8 review. So once again, what I'm going to have you guys do is with this. So as we remember, chapter 7 dealt with a lot of information, right? It also allowed us to journalize. So that's exactly what this is, right? We have a journal right here, right? Should be a decent amount of pages, okay? 3 or 4 or 5 pages, right? We have a chart of accounts, right? Because every transaction we need to do, we need to have an associated account number with them, okay? And we have our inventory worksheet right here. So we're only doing one problem or one type of method. So let's go ahead and take a look at here, all right? So this is what we're going to be practicing, chapter 7 and 8. Question number 1 is going to be your inventory method is perpetual and it is moving average. So once again, this is just strictly moving average and we're dealing with just the month of May. So with that being said, let's go ahead and get started. And what happened on May 1st? May 1st. So how I'm going to have you guys do this is, first rule of things, you always are going to journalize first, okay? Now, yes, you want to maybe jump into the inventory worksheet, but oftentimes what happens is when students do that, they often forget to journalize it afterwards. So how I'm going to teach you is I want you to journalize as much as you can. If it's the calculation that you need to plug in, then journalize your foundation first and then proceed with the calculation and then go back to your journal to plug in your numbers, okay? Usually that's the best way to do it. Just because oftentimes when we do move on to our fictitious business, if we go dive straight into the inventory worksheet and we forget to journalize, then that's where you're going to have holes and discrepancies when we do our ledger or when we do our trial balance. Something's going to be off, okay? So good rule of thumb and a good practice for doing this is journalize first and then plug into your worksheet afterwards. So let's go ahead. For May 1st, we purchased 500 brown mugs at $2.65 with a freight of costing you $100. Once again, we place this on an account and from Cuppies Co. with the terms of 5% 15 net 30. So how are we going to journalize this? Okay. First, let's go ahead and take a look at our chart of accounts before we can go ahead and jump to conclusions. We need to exercise our transaction analysis. We recognize that a transaction has happened. Now, one of the components or one of the steps here is let's look at our company's chart of accounts. Do we have an existing account for us to safely journalize our transaction? Yeah, good. We have mugs, right? What else do we have?
We have freight expense.
Now, do we ever use freight
Never mind.
expense?
Never mind. Yep, nope, scratch that.
Okay. What else do we need to recognize?
Let's see. Purchase expense though? No,
Okay.
we have mugs, right?
We have mugs. Perfect.
Yeah, okay, so on accounts payable.
Good. So we need account 150 for mugs and account 201 for accounts payable. So let's go ahead and go to our journal. So we know that this happened on May 1st, okay? Now, how do we recognize that we purchased inventory? What are we going to debit first?
Your mugs.
Good, right? Because we're increasing our assets, right? We purchase mugs, so therefore we're increasing our inventory supply. Okay? And what this was 150, okay? Account number, right? That's what the PR is. For how much? Right? We can leave that for the inventory worksheet. So let's at least build our foundation. So we recognize that we have the account mugs because we purchased our inventory, right? And we're going to increase our liability because we decided to owe them money, right? We purchased something and said we place it on account. We didn't pay them, we owe them money. So in this case, this was account number 201. Now, let's go ahead and plug in our numbers into the worksheet, just so then instead of doing double calculation. Okay, so let's take a look at our information once again. How many items did we buy?
500.
500 at 265 with a freight of 100. So inventory worksheet. Okay, it's May 1st. Okay, we purchased 500 items at 265 with a freight of 100. So therefore, what is going to be my total purchase price? $13.25. Okay, what's my total cost? $14.25. And what is my average cost per item now, since we only have one batch and one batch only? $2.85. Even?
Yes.
Perfect. Okay, it's $2.85 even. So once again, I'm going to go ahead and carry this information into my inventory on hand. And what costing method am I using?
Moving average.
Moving average. So therefore, where does my formula, when I'm calculating this, what am I calculating all the time? We're always calculating our average cost per item. So in this case, my formula lies in the middle, right? I'm always going to calculate my average cost per item because every purchase I make and every sale I make is going to affect my average. So in this case, it is still $2.85. And I'm going to go ahead and stretch this out about maybe that many decimal places. And I'm going to go ahead and drag down the formula so then I don't always have to calculate it over and over again, right? It's going to be my total cost divided by my quantity. Okay? And now I have a total, right? I have a grand total cost of $14.25. So just like here in my journal, I'm going to recognize that it was for $14.25. Excuse me. Okay. All right. Other information that's pertinent to me would be, well, first off, I purchased this from Cuppy's Co. Okay. How many items did I buy? I bought 500 mugs, and it cost me $2.65 each. And they gave me terms, right? What were they?
5% if paid in 15 days. If not, then 30.
Okay, so that means 5%, 15, net 30. Okay, right? We're practicing journalizing. We recognize that we have perpetual inventory. We purchase our mugs for $2.65 each plus our freight of 100, giving us a grand total of $14.25. And that's exactly what we owe on an account. Okay? Any questions about journalizing? Right? Right? Like I've mentioned before, this is going to be what we're going to be learning for the rest of the class. Okay? So now that my journal is complete, I have a description, I have my PR filled in, I have my debits match my credits. Now we can move on to the next scenario. So what happened next?
May 5th, you returned 15 broken mugs for a full refund.
Okay, so we ended up returning 15 of the broken mugs. Okay, so let's go ahead and journalize first. Get the accounts down and then calculate the rest afterwards. So let's check out my chart of accounts. What am I going to be utilizing?
Returns and allowance.
Okay, now which kind of returns and allowance?
Purchase returns and allowance.
Okay, now what kind of inventory do we have? Periodic or perpetual?
Perpetual.
Perpetual, okay. So therefore, do we need to create this contra account? Purchase returns and allowances? Where are our inventory items right now?
Inventory.
They're in inventory. What was the rule? If everything goes into inventory,
Everything comes out.
everything comes out of inventory. So in this case, I only threw that in there just so then it throws you off. In this case, we're dealing with only perpetual inventory. So in this case, we only need our mugs. How did we pay this customer? In accounts payable. Excellent. So in this case, I'm requesting for a full refund. What was the date? May 5th? Yeah. May 5th. Right? Right? Skip a line to show that you finished this transaction. So if I paid on an accounts payable, right, and they're giving me a full refund, what does that in
Accounts payable.
good accounts payable? It's going to reduce my payment. And last thing, like I've said before, because they're broken, therefore it's no use for me. So I need to take it out from my mugs account. Okay, so 201 and 150. So now let's go ahead and go into my inventory worksheet. Okay. And where I'm going to place this is going to be in my purchases area, right? Because I'm returning. I didn't sell my items. I'm simply returning. So in this case, right, this is where you could put your negatives in here. So if I'm returning 15, right, meaning I need to make it negative because I don't have it anymore. How much did it cost me per item? $265, okay? So therefore, what is going to be my total cost that I'm returning? $39.75. So just exactly like this, right? $39.75, right? I'm gonna go ahead and update my inventory. Since I don't have 500 items anymore, right? Because I returned 15 of them, how much should I have in my inventory? I should have 485, right? I bought 500, I returned 15, I should have 485 left. Okay? Same thing with your total cost, right? If your total cost was the 1425, but I ended up returning $39.75, how much is your total cost now?
1385 and 25 cents.
Good. So once again, since I plugged in my formula here, right, I wasn't specific on how many decimal places I needed. I just did the straight formula. I took the total cost divided by my quantity, and now it shows me that it is now $2.85 and 619. Right? So therefore, I don't have this number anymore, so I can proceed to just clear it out, hide it. Hide the information because now what's most important is that I have 485 items available, costing me at a grand total of $1385.25. That's what's important. Okay? And here I've already calculated how much my return is going to be for. It's going to be for the 39.75 cents. So I can go back to my journal and recognize that my return is going to be for 39.75.
I have a question.
Yes,
I mean, I must have missed something. We're doing moving average, right?
correct.
Okay, so on the inventory worksheet, since we lowered our quantity, wouldn't our cost per item change?
It did change. Remember, it went from 185 even, now down to 185,619. It
Can
did
you click on
change.
that formula so I can see what I did wrong? Yeah, that's exactly what I did, and it's coming up. I'm coming up at 265.
Did you expand it and everything? To 265? How did you get 265?
I
Okay, did you
1,385,25, right? And the 485.
clear this out? You could have accidentally took the one above.
No, you know what? I see what happened. It cell referenced a different cell, and I just caught it.
Yes. Okay. Okay. Right.
Yeah, I'm good.
All right. So back to our journal, right? We returned $39.75 worth of our mugs. And of course, I'm also going to make a note for here, okay? I'm going to say return 15 broken mugs at $2.65 each, full refund. Okay? So that makes a note right there that I ended up returning 15 of the broken mugs and I got a full refund for it. Okay? Okay. So then let's see what has happened next. Right? So what happened on May 6th? Oh, I'm sorry.
20 mugs.
I'm sorry. The same date for May 5th, right? I indented it to so you guys can know that's a separate transaction. So what happened on the same day? Sorry about that.
You sold 10 mugs.
Okay,
Cash.
we sold 10 mugs for cash. So first things first. Let's journalize it. Okay, use your chart of accounts. What items will I be needing?
The mugs and cash.
Okay, what else do I would need? I sold.
Cost of goods sold.
We need a cost of goods sold, and what else? What's the main transaction here? If I sold 10 mugs at $10 each for cash,
Accounts payable?
not accounts payable,
Cash.
we sold it for cash.
102.
We need cash for 102. Okay, let me just double check. So it doesn't say that you need sales tax, but if you want to practice it, go ahead and throw in sales tax for 8.25%. So in your chart of accounts, you do have a sales tax payable item. So go ahead and calculate that. So all right, so first things first is, what is the transaction that happened first before I update my inventory? What did I do first?
You sold the mugs.
You sold the mugs. Good. So what am I going to recognize? Not mugs. We're not updating our inventory right now. What are we doing?
Sales?
Sales. Correct. We need to recognize that we have a sale that has happened. And then the next journal that we're going to recognize is, how much did it cost me to sell, and what do I need to get rid of from my inventory? So in this case, I need to recognize the very first thing first. What must happen in order for you to update your inventory? A sale must happen. If you don't have a sale and you just take things out of your inventory, then you're just taking things out of your inventory and you're not recording how and why you're taking stuff out of inventory. So first thing you got to recognize is your sales. We received cash for 102, and we had a sale for 401, and we're going to do sales tax of 230. Okay? So first things first, we're going to recognize we got cash. We're also going to recognize our sales. And we're also going to recognize tax. Okay, so cash was 102. Sales was account number 401. And sales tax payable was 230. Okay. So first things first. How many mugs did I sell? 10. At what price? $10 each. So what's my total sales? $100. How much is my tax going to be? $8.25. So how much cash am I going to be receiving for this sales? 108. Oop. Fat fingered a few things there. Okay, 108.25. Okay. Now let's go ahead and record the sales, or record how much items we sold. So in this case, we need a cost of goods sold. And where are we taking this cost of goods sold directly out from? We're taking it out from our mugs. So let's go ahead and recognize what account number is my cost of goods sold. 501. And the mugs was 150. All right. So now let's go ahead and go to our inventory worksheet so we can solve for our cost of goods sold. So here we are. It is now May 5th, yes. We sold 10 mugs. At what cost?
265.
360.
No, 285.
Yes, 285,619. Okay. Once again, we're going to do equal round because that's not a nice number. Comma 2. So how much is my total cost of goods sold?
285.62.
Yeah, 28.56. Good. So now, let's update our inventory before we go ahead and go to our journal. Okay? So we no longer have 485. We have how much left?
475.
We have 475. Good. Okay. If we started with 1385 and we subtracted out 2856, how much should we have left?
$1382.39.
13. Okay, let's try that again. So we're subtracting these two numbers, right? We started with 1385.25, and we're subtracting out the 28.56. So we should have how much left? Okay.
I missed my worksheet, so I need to fix it really quick.
Okay. Take your time.
What was your question?
I was asking them if you started with 1385.25 and you subtracted out 28.56, how much should you have left?
1356 and 69 cents.
Yes, Therefore, it has recalculated my new average cost per item. Okay.
619.
Yep. It should stay the same. So here we know for a fact that we sold a total of $28.56. So we could go ahead and journalize that. Right? So we could say 28.56 is my journal. And I'm going to make a note that I sold 10 mugs. Okay. This one we automatically know because this is what we do for perpetual inventory, right? We know that the previous journal entry is going to be connected to the second one. So in this case, you don't really need to have a journal entry or a description underneath the first entry unless you feel necessary. You're just going to type in the same thing. You sold 10 items. So in this case, because these are connected or related to each other, you don't really need to do much. You don't need to have a description for every single one. Unless you want to say, I sold 10 mugs at $10, which it shows you right here. It should be $100. So again, your description is whatever you want to put in there. But in this case, I don't feel the necessary to have it there. Okay. So then, now that we finished and completed our journal, let's see what has happened next on May 6th.
We sold
You
20
sold
mugs.
20 mugs.
Okay. To who?
Customer A.
Customer A on account.
Okay.
Sorry,
And
were you saying that?
what
Yeah,
was...
you're fine.
Okay. So to customer A on an account. So, and we gave customer A some terms. So 10%, 10 days. If not, the whole thing is due within 30. So let's go ahead and look at our accounts and tell me what accounts do you need.
Accounts receivable.
We need an accounts receivable. Good. What else?
Discounts.
No.
Sales discount.
No. So if we give a person terms, right? What is the circumstance that they must meet in order for them to get the discount?
They have to pay within 10 days.
They have to pay. So in this case, did customer A pay or did they just purchase from us?
Okay, the accounts payable.
No. Accounts payable is when we owe somebody money. Your accounts receivable is correct because they owe us money, right? It's customer A. Customer A bought something from me, right? They're my customer. So because they owe me money, therefore accounts receivable is correct. But we can't recognize that we can't recognize the discount because did they pay us? No, they owe us money. Until the day that they pay us, that's when we can determine whether they get their discount or not. Okay, so in this case, no sales discount. So we're going to recognize accounts receivable. What else are we going to recognize?
Mugs.
Not yet. But yes, that's going to be one of the items. Yes, that will be one of the items.
Be sale.
Sales. Good. And what else? Sales tax. Good. So let's go ahead and journalize this. So first things first is you need a sale to happen in order for you to update your inventory. Okay? Always rule of thumb. Okay? If you can't take things out of your inventory without having a reason why. So in this case, my reason is because I need to record that I made a sale in the first place. So again, we recognize that our customer owes us money. Okay? And that account number is 103. Okay, so they owe us money because they bought something from us, but they didn't pay for it right away. They decided to put it on an account. Okay, we need to recognize that we sold something, right? And we also need to know how much tax to charge them because, again, they may have bought something from us, but they bought it in the store on an account from us. So therefore, we need to total up how much they owe us. So in this case, how many mugs did I sell to customer A?
20.
We sold 20. At how much? What was my selling price?
$10 each.
$10 each. So sales, once again, is going to be 20 times 10, 200. So what's going to be my tax?
$16.50.
It's going to be $16.50. So how much in grand total does customer A owe me? $216.50. In this case, you need to make sure that you write customer A, right? They owe you, right? They purchased what? 20 mugs. Okay? And we gave them terms, right? They can receive a 10% discount if they pay within 10 days. If not, they pay the whole thing in 30. Now let me double check that. Was it 10%, 10?
10,
10?
30, yeah.
Yeah, 10, 10, 30. Okay, perfect. So that means if they pay within 10 days, they can take a 10% discount. But if they don't and they miss it, then they just have to pay the whole thing within 30 days. Okay? So, yes, so there you go. I complete my journal. That is it. Now, because I recognize that I sold something, now I need to recognize that I need to update my inventory, right? Because I don't have my inventory items anymore. I sold them. So if I sold them, they're going to be cost of goods sold, and you're going to recognize your mugs. So 501 and 150. So let's go ahead and determine what my cost of goods sold is for selling 20 mugs. So once again, it is 5.6. We sold 20 items. At what cost?
2.85619.
2.85619. Yes. So, once again, what is my total cost of goods sold here?
57.12.
Okay. 57.12, right? Okay, so that means that's my cost of goods sold right there. So let's go ahead and update my inventory first before I move on. So if I started out with 475 and I sold 20 mugs, how much should I have left?
455.
455. Okay. What is my new total cost now?
12.99.57.
$12.99.57. And once again, my formula has calculated that I have now 2.85620. Okay. And I'm just going to go ahead and hide this information so it doesn't distract me. Okay. So good. We calculated that we sold a total of $57.12. So now I go to my cost of goods sold. $57.12 is what it cost me to sell 20 cups. So I'm going to go ahead and indicate here that I sold 20 mugs, and I'm going to be specific to customer A, just in case customer A turns around and sells it back and returns it. Okay, so this one I'm being specific because I know who I sold it to. The other ones, I don't know who. They're random people. I can't really keep track of them. So in this case, I'm specific on who I sold these cups to. All right? Everyone good with me so far?
Give me 1 second.
Okay. Okay. All right. Okay, so there you go. I finished my journal, right? I have my accounts. I have my description. So let's see what has happened next. All right, so May 8th.
Purchased 250 mugs at $275 with a freight cost of $50.
Okay, oops, sorry. So we purchased more mugs on an account, okay, from Cuppies Co. And they gave us a brand new terms of 5%, 15, net 30. So once again, let's at least journalize the foundation, right? We recognize that we're purchasing inventory, right? So this is May 8th. All right, skip a line. So May 8th, right? What did we purchase?
Mugs.
We purchased mugs. Good. How did we pay for it? Good. So once again, mugs is 150. Accounts payable is 201. Right? So here, I'm just going to leave it here because at least I put my foundation down. And I'm going to go ahead and just go straight into my inventory worksheet to solve for what my total purchases was. So again, May 8th, okay, we purchased 250 mugs at $2.75 with a freight of 50. So once again, 250, 275, 50. Okay. 250 at 275 with a freight of 50. So what is my total purchase price? $687.50 plus my 50 freight to give me a total cost of $737.50. And once again, let's add it to my inventory. So if I started with a beginning of $455 and I added my $250 of inventory, how much, should I have left? Or should I have now?
705.
Let's do it again. So 455 plus 250, 705.
I wrote so little I couldn't see it.
Okay. All right. So what's my total? What's my new total cost now?
$2,037.07.
$2,037.07. Good. All right. Bring in my new average cost per item to increase by 3 cents. Okay. Good. Oh, did I hit the wrong one? There you go. So now I have the information. I have $737.50 as my total that I purchased. So here, $737.50 is what I purchased in grand total. And once again, I'm going to fill in my description, right? Most usually important information would be, who did you purchase them from? I purchased this from Cuppies Co., right? How much did I purchase? In this case, I purchased 250 mugs at 275 cents each. Lastly, did they give me terms? Yes, they did. 5% if I pay within 15 days. If not, the whole thing is due in 30. Any piece of information that you find pertinent to this transaction. So in this case, these are the most important things I need to know, right? Usually an invoice number would be there or some kind of PO number would be there. That's definitely going to be important, and we'll take a look at that when we dive into our fictitious business. But for now, this piece of information is good enough. Okay. So everyone go with me so far?
Yes.
Okay. So then, what has happened next or on the same day?
Returned 50 mugs because they were the wrong color.
Okay. Now, did you really return them?
No, because they offered you a
Oh,
discount.
I gave,
Okay. Because they said, hey, brown mugs, black mugs, white mugs, what does it matter, right? You could still use them and sell them out. So in this case, they said, well, you know what? To compensate for our mistake, how about we give you a 15% discount off of those coffee mugs because we sent you the wrong color. And we said, okay, you know what? That's fine. You're right. We can sell these mugs. Not a problem. Okay? So we accept that 15% discount. So let's go ahead and recognize what are we going to be recognizing. So in this case, we're returning 50 mugs. Okay? But we're only getting 15% back. So what am I going to be recognizing in my journal? Accounts payable, right? Because that was the method of how we paid, right? Because they're going to give us money back. They're going to reduce what we owe. Okay, good. What else are we going to be recognizing?
Purchase returns and allowances.
Okay, now let's take a step there. What kind of inventory are we focusing on?
Yeah.
There you go. So, where are we going to take the discount from?
sales
Mugs.
discount.
Directly out from our inventory, which is our mugs.
Yep.
Okay, always. Every time we're doing perpetual, it should be the easiest one because all you need to know is inventory, inventory, inventory. Okay, so in this case, I'm taking it directly out from my mugs. Okay, now it's up to you. You can either we can solve for it in our inventory worksheet. Okay, so once again, let me see. It is the same thing, May 8th. Okay? We're going to recognize that we're not really returning, right? But we know for a fact that it should be for how much? How much was each cup?
$2.75 each.
2.75 cents each, right? But in this case, I'm going to go ahead and calculate it right in this little window right here under my total cost, right? That I'm supposed to be multiplying my 275 by my 50 items, right? And I'm getting a 15% discount, right? So what is 15% of the 50 mugs that I'm attempting to return? What's my allowance in this case? Oops, yep, there you go. Times by 15% gives you 2063, right? It's 20, it's 15%. Yeah, 15%. So there you go. I should get a total of $20.63 back. And I didn't make a return, okay? So therefore, I should still have my 705, right? I'm just doing that so you guys know where this, I'm not updating my quantity. It should still reflect as 705. However, my total cost has changed because I actually got some money back. I didn't pay for those black mugs in full price, right? I got a discount. So in this case, what's my new total cost going to be?
$20.57.70.
20,
2016-45.
20, okay, so 2037.07 minus 2063 should be 2016.
I put plus.
Okay. Yeah, sorry about that. I just want to make sure that you understand that this is to subtract out.
Oh no, I knew it was a subtract out.
I did the same thing. I erased it. Yeah. Okay. So there you go. 2016.45. And once again, now my inventory average cost per item has drastically dropped by 2 cents because I have less to spread I have less cost now, but I still have the same amount of quantity. Okay. All right. But now that I solved that, I know for a fact that I should have a refund for $20.63. So I need to go back to my journal and I'm going to go ahead and 2063. Right? Plug in my numbers because I know I need to get $20.63 back. Right? And once again, I'm going to also indicate that I attempted to return 50 black mugs at, was it $2.75 each for 15% discount. Right? That should be good enough information. All right. Is everyone good so far? Okay. All right. So now that we have this day completely done, what has happened next on May 10?
Sold 30 mugs at $10 each for cash.
Okay. So let's journalize this transaction first, right? Oh, I guess we're at the end of our journal, so we're going to skip that and go to the next page. Okay, so it is now May 10, right? We sold 30 mugs, okay? For what?
$10 each at cash.
Okay, there you go. So we recognize that we received money, okay? We have to recognize the sales first, right? And of course, we're going to charge sales tax on top of that. Okay? So once again, cash should be account number 102. Sales is account number 401. And sales tax payable should be account number 230. All right? So if we sold 30 mugs at $10 each, what is my total sales? 300. Okay? What is my tax that I'm going to be charging my customers at?
$24.75.
$24.75. So in grand total, how much cash should I receive in total?
$324.75.
Correct. Okay. And
How did you get the 24.75?
I just took the 300 times the tax of the 8.25%. And because I want to round to the nearest penny, I just rounded it by 2. So I just took 300 times the tax. You okay there, Alan? What happened?
My Excel's just giving me a problem. Let me mute myself.
Okay. All right.
Okay, and then it was a 300.
300 times the tax.
I got that 324.75. Got it.
Perfect, right? Then you add those up together to see how much cash you got in grand total. Once again, because sales, right, you're going to mention it when you post it in your cost of goods sold. So we'll skip that description and just go straight into the cost of goods sold. Okay. Once again, because we're selling our mugs, it's going to come right out from our inventory. So, 501 and 50. So now let's go ahead and go to my journal. I'm sorry, my inventory worksheet. And let's solve for selling those 30 mugs, okay, on May 10. So May 10, we sold 30 mugs. At what cost?
At the $2.86021.
Good. So how much is my total cost of goods sold?
$85.81.
$85.81. Good. So that's how much we sold. Now let's go ahead and update our inventory so then we can go ahead and proceed. So what should be my updated amount if I sold 30 items?
675.
675. Okay. What's my updated total cost going to be if I sold 85 and 81 cents? 1930.64, and once again, my new average cost has decreased by 10,000th of a penny. Okay. So here's the information that we needed, the 85.81. So let's plug that into my journal. 85.81. Okay. And of course, we're also going to plug in that we sold 30 mugs. Okay. All right. Everyone good?
Yes.
Okay.
Yes.
Okay. So then, what has happened next on May 12th?
Sold 60 mugs
Okay. To who?
to customer B.
Okay, we sold 60 mugs at $10 each to customer B on an account. Okay. So, once again, let's journalize our foundation first. What's the transaction that happened at hand?
Accounts receivable.
Accounts receivable, right? We sold our cups on an account to our customer. So, accounts receivable. Okay. What else do we need to recognize?
Sales and sales tax.
Good, right? We need to recognize that we sold something in the first place. Sales and sales tax payable. Okay. So sales was count 401. Sales tax payable was count 230. Okay. Now we sold 60 mugs, okay, at $10 each. So how much is my total sales?
What's 10 times? 600.
600. Okay. So now I need to calculate my tax. So how much tax?
49.50.
49.50. Good. All right. So now, how much does customer B owe us in grand total?
$649.50.
$649.50. All right. And once again, definitely something you definitely should indicate that you sold to customer B. Okay, on an account. How many cups did you sell? You sold 60 mugs. Okay. And yes, 10% if he pays in 10 days. If not, he pays in full in 30.
And then it would be cost of goods sold.
Cost of goods sold. Good. So we need to recognize that we sold to cost of goods sold. And we're going to take that right out from our inventory. I think 501 and 550. Okay, so inventory worksheet. And we sold on May 12th, 60 at what cost?
$10 each.
Oh, that's our selling price. How much did it cost us? Good.
2.86021.
Good. So therefore, what's my total cost of goods sold here?
171.61.
171.61. Right? All right, so that's the number that we're looking for. But let's go ahead and update our inventory first. So what's my new quantity?
615.
615, right? What is my new total?
1759 and 3 cents.
1759 and 3 cents. So therefore, my new cost per item, average cost per item, is now the same thing. Right? So once again, I'm going to hide this information. All right. So the thing that we needed to solve for was our cost of goods sold, which was the 171.61. So back to my journal. 17161 was our total cost of goods sold. And once again, I'm going to also indicate here that I sold 60 mugs to customer B. Okay. All right. Everyone good?
Yes.
Okay. Let's see. Nothing else on that date. All right. So then what happened on May 15?
Return 30 mugs for a full refund.
Okay. So I guess whatever customer B bought the cups for didn't need all of them, so he decided to just go ahead and return half of them back to us. So in this case, the customer is actually returning and wanting a full refund. So let's journalize what's going to happen here. Okay? If a customer decides to return something to us, what does that mean?
We're putting it back in inventory.
We're going to put it back in inventory, but what's the first thing that we need to recognize?
The money we're giving back.
The money that we're giving back. And what else?
How we're giving it back to them. Account.
Good. All right, here. So, what is the customer doing? Returning. So, which account are we going to be using?
Accounts receivable.
We're going to be using, okay, good. What else?
Sales and tax.
We're going to give them back their sales, but what account? Okay, so no, not sales per se, but the tax for sure. Yes, we have to give back their money back that we charged them for tax. What else do we need to also recognize?
Sales returns.
Sales returns. So account number 406. So what's going to come first? How are we going to journalize that a sales returns has happened?
Accounts receivable.
Okay, so are we going to be increasing what they owe us, or are we going to be decreasing what they owe us?
Accounts payable?
That's accounts payables when we're dealing with our vendors. This is our customers. Okay. What kind of account is sales returns and allowance?
Contra account.
Contra account. Okay. If sales is usually a credit account, how should a sales returns and allowances act?
Opposite.
Opposite. So, again, if the act of a sales returns and allowances, right, decreases sales, therefore, you need to have it flow in the opposite direction. So, sales returns and allowances. Okay, so that's 406. Now, we need to give back their sales tax, right? So,
Yes.
does that mean we owe the government more or we owe the government less?
Less.
Less. So we have to reduce our sales tax payable as well. And lastly, how did customer B pay us?
No, on account.
Yes, we're going to reduce their account. Right? They didn't pay us, so we're going to reduce their account. Okay, so 230 and 103. So first off, they're returning 30 mugs to us. How much did we originally charge those 30 mugs? Or just mugs in general? How much did we charge them?
$10 each.
We charged them $10 per cup. So in this case, how much am I supposed to be refunding?
$300.
$300. Now, we also have to give back their tax money for this because we can't take their tax money because we're giving them a refund. We have to give a portion of their tax back because it's not our money, it's their money. So in this case, how much tax am I going to be giving back as well? $24.75. So in grand total, how much am I refunding customer B? $324.75. Okay. Okay, is everyone good? Yes.
Okay, for the taxes, I messed up something.
Okay.
So it's equal round,
Mm-hmm.
parentheses,
Your parentheses should automatically be there once you...
0825,
Uh-huh.
comma 2.
Uh-huh. Enter.
That works.
Okay, so $24.75. So in grand total, we're gonna reduce his account to now $324.75 because he doesn't owe us that money anymore. Okay. All right. so, and of course, I'm going to also write that customer B returns 30 mugs for full refund. Okay. Now that was just the recognizing the sales portion. Now we need to re-update our inventory because he decided to return those cups back to us. So therefore, what am I going to recognize?
Accounts payable and mugs.
Accounts payable, no, because we're not dealing with our vendor.
Oh, I'm sorry. Yeah, sorry. This is customer.
Yes. Now the customer is giving back our inventory. So what do we need to do?
Put it back in inventory.
Correct. So we need to increase our inventory once again. Right? Now, what is my credit account going to be? Well, not account. We already finished our first one, which is the accounts. Okay. Okay. So the question is, if we're refunding something that we sold, what account should I reflect here?
So return and allowance?
We already did that in the very first section right there.
Purchase return allowance?
Where this is perpetual inventory. All right, let's listen to my words carefully one more time. If I returned something I sold,
Return sales allowances.
no, we already did that at the top.
Oh, that's right.
Okay. If I'm undoing what I sold, okay, if I sold something, right?
Oh, cost of goods sold.
Thank you. So you have to undo your cost of goods sold because you didn't sell it. You end up refunding it. So in this case, you do need to recognize that you have to actually undo your cost of goods sold. Okay. So that's because we didn't sell those items anymore, right? We ended up the customer ended up returning the items back to us. So therefore, because they are returning it back to us, we need to undo what we calculated as our cost of goods sold, and we also need to put back the items back into our inventory. Now, of course, in reality, you wouldn't do this because technically they touched the items. You don't know what they did with the cups. They could have used it and washed it and said, hey, I'm going to return it. We don't know what they did to it. So technically what you would do is you would actually place it into like a refurbished account. But in this case, we're just generalizing, and this is what you would typically would do. All right, you would just reverse that you sold it, and you would reverse and place it back into your inventory. So in this case, let's go ahead and go back to my inventory worksheet, and let's go ahead and recognize that we're undoing our cost of goods sold. So once again, it is now May 15, right? We're going to return 30 items, right? So negative 30. Let's do negative 30. All right. Now in this case, at what cost am I going to use?
Wait, if the customer is returning the mugs to us,
Mm-hmm.
wouldn't we be adding to our inventory?
Yes, but I'm in my cost of goods sold section right now. I'm not adding to my cost of goods sold, am I? No, I'm refunding my cost of goods sold. So in this one, you do have to be careful when you do your calculations. Yes, you are adding back that amount. But in this case, I'm under my cost of goods sold section. I can't say I sold something, right? I can't put a positive number there. It has to be a negative number because I'm refunding it. Yes. So in this case, that's where the negative 30 comes from. But yes, yes, you are technically adding it back into your inventory. So you have to be very careful when you do your calculations. So in this case, at what cost am I going to recognize this?
286,020.
Okay. So now with this given notion, right, why are we taking that number instead of the number before that? In this case, because we've already calculated it, it's already been a couple days now. Do you think you're going to remember what the last transaction is? What if you had a few customers come in before you? Then no, it's all going to be mixed up and matched. So you're not going to look for what you originally costed out for. You're just going to take your average and just add it back in there. That's exactly what you're going to do. So then, when you calculate more and more and more, you're just still going to get the same number at the end of the day. So in this case, how much am I going to be getting back?
8581.
Okay, comma 2. 8581. Okay. So once again, we're going to update our inventory. So because I'm adding it back, so I need to subtract it, right? Okay. So how much should I have back into my inventory? 645. Okay. And then at what total cost if I'm going to be adding back the 8581?
1844 and 84 cents.
1844 and 84 cents. So therefore, my new average cost per item has increased by 10,000th of a penny. Okay. So now I have more inventory to sell instead of less. Okay. Because I put it back into my inventory on hand. And once again, the number that we're looking for is my 8581. So make sure you journalize the 8581 as the items that you put back, and that's how much it costs you to put back. Okay. And I'm also going to indicate that this was customer B returned 30 mugs. Okay. Not that it matters whether you know who returned it, but it's also good to know that at least you kept track of your inventory saying, well, I sold this to customers B, but they returned it. Okay. It's up to you if you want to make specific notes on that. Okay. So right now it is 4:52 and we have one more transaction left here. So what I'm going to do is I'm going to highlight this. We're just going to leave off of this so that when we come back tomorrow, we'll start right away off of this last transaction right here on the 15th of May. Okay. So, all right. So once again, I'm going to stop here. Okay. We'll continue on tomorrow and finish it off.